In the first video in this series, we learned that every business should keep a record of its transactions in a set of accounts. We also learned that a set of accounts is made up of a collection of individual accounts called general ledger accounts, which are organized into 5 account types: assets, liabilities, owner's equity, revenues, and expenses. We also learned that each general ledger account belongs to one and only one account type. For example, a general ledger account called rent, where you record the monthly rent payments you make to lease your office, belongs in the expenses account type. In the previous video, we also took a few basic transactions for a pretend business you run and entered the debits and credits for those transactions into our set of accounts. In one example, after you got paid $500 for creating a logo for a client, you posted a $500 credit to the sales income general ledger account and a $500 debit to the cash at bank general ledger account. After assigning the postings to those general ledger accounts, you were probably left wondering, how was I supposed to know which of the 2 general ledger accounts should have the debit and which one should have the credit? Well, the answer to that question lies in what's known as the nature of each of the 5 account types and the general ledger accounts that belong to them. Once you know their nature, you will easily be able to figure out whether each posting you make to your general ledger account should be a debit or a credit. So let's dive in and learn about the nature of each of the 5 account types and the general ledger accounts that belong to them. Each one of the 5 account types is either debit or credit by nature, and each general ledger account within an account type adopts the same nature as the account type it belongs to. That may sound a little confusing, so let's map it out and then take a look at some examples. First of all, let's take a look at a list of the 5 account types and the nature of each type. Assets are debit by nature, liabilities are credit by nature, owner's equity is credit by nature, expenses are debit by nature, and revenues are credit by nature. The debit and credit nature of each account type is one of the fundamental principles of accounting and bookkeeping. It's something you just have to accept, like we accept that the total value of debits should also equal the total value of credits, and we accept that the sky is blue. Okay, so now you know that each of the 5 account types has either a debit or credit nature, and you also know that each general ledger account within an account type adopts the same nature as the account type it belongs to. For example, any general ledger accounts that belong to the assets account type will be debit by nature. This could include accounts such as cash at bank, inventory, or motor vehicles. They are all assets and they are all debit by nature. Likewise, any general ledger accounts that belong to the revenues account type will be credit by nature. This could include accounts such as sales income and interest income. So as you can see, the nature of any particular general ledger account is the same as the nature of the account type it belongs to. Now, the reason this is important is that when a general ledger account increases in value, it follows its nature, and when it decreases in value, it goes against its nature. To illustrate this point, let's take a look at the 2 example transactions from the first video in this series. In the first transaction, a client paid you by transferring $500 into your business bank account after you designed a logo for them. To enter the transaction into your set of accounts, you posted a $500 debit to the cash at bank general ledger account and a $500 credit to the sales income general ledger account. Although you learned which general ledger accounts to post each side of the transaction to, you didn't learn why the posting to cash at bank should be a debit and not a credit, and why the posting to sales income should be a credit and not a debit. Well, now that you know about the nature of the 5 account types, you can easily figure this out. Let's start with the first side of the transaction, which was posting a $500 debit to the cash at bank account. cash at bank is an asset and is therefore debit by nature. So when the balance of cash at bank increases, you need to post a debit to the account. That's why when your client transferred $500 into your bank account, which increased its balance, the $500 posting you made was a debit and not a credit. See how that works? Let's take a look at the other side of the transaction to drive the point home. As well as posting a $500 debit to the cash at bank account, you also posted a $500 credit to the sales income account when you got paid for creating the logo. So why was it posted as a credit and not a debit? Well, as you may have already figured out, the sales income general ledger account belongs to the revenues account type, which is credit by nature. Because the value of the sales income general ledger account increased, the $500 posting you made was a credit and not a debit. Okay, so that's it for the first transaction from the previous video, and in that transaction, both general ledger accounts increased in value, so you went with the nature of each account type both times. Let's take a look now at the second transaction from the previous video, where one of the general ledger accounts decreased in value, which meant you needed to go against the nature of its account type. For that transaction, you paid a fee to Canva of $20 for a Pro plan subscription. You use Canva to create logos, banners, and other marketing material for your clients. One side of the transaction was posted to a general ledger account called Subscriptions. That account belongs in the expenses category. Because the value of the account increased by $20 and the expense category is debit by nature, you posted a $20 debit to the Subscriptions general ledger account. So that was another increase in the value of an account, which meant you went with the nature of the account type. But the other side of the transaction was a different story. For the other side of the transaction, you posted a credit of $20 to the cash at bank general ledger account. That's because you paid the $20 fee out of your business bank account. Now the cash at bank account is debit by nature, so why post a credit? As I'm sure you've figured out, it's because the cash at bank account decreased by $20. This meant posting an entry to the general ledger account against its nature, which meant posting a credit instead of a debit. So that's it for our two example transactions, and as you can see, when you increase the value of a general ledger account, the posting you make to that account will follow the nature of the account. And when you decrease the value of a general ledger account, the posting you make to that account will go against the nature of the account. So now you know how to decide whether a posting you make to a general ledger account should be a debit or a credit. This rule of going with or going against the nature of an account type to figure out your debits and credits applies to every single general ledger account you use in your business. It doesn't matter what transaction has occurred in your business or which general ledger accounts are involved, you must follow this principle when you post your transactions to your set of accounts. Okay, that's it for this video. In the next video in this series, you're going to learn how to use T accounts to help you map out any transactions you need to enter into your set of accounts. See you there.